Hey guys, what's up? Alec back with the daily stock market, and look at that. Oil is skyrocketing right now, up 28% in the past month. So we're going to go over some oil stocks because everyone's wondering about oil, if it's a good idea, if they should hold off with the whole situation in Russia unfolding. We'll also go over a few other stocks, and we have some stocks actually reporting earnings this week as well. So we'll go over all that. Make sure you stay to the end so you don't miss any fine details. All right, guys, drop a thumbs up on this video if you want me to keep making them, and comment below what you want to see next. Jumping right in the video, we have USO is pretty much the premier oil fund. You know, this is pretty much when people say oil, they think of USO. So that's a good thing to know if you're a newer investor. All right, the past 3 months, they're up 63%, and the past year, they've skyrocketed up 81%. Absolutely ridiculous. Okay, now personally, I want to be buying under $50 per share. Probably won't touch the fund until it's under 50, which I definitely think will happen again. There is no guarantee that it will go under $50 again. So if you want to make sure that you get in and you really want to hold for a long term some oil, then it might be a good idea to get in under $60 per share. Okay, now with that being said, remember when we had the whole pandemic going on, you know, oil was right at $90 to $100 for a while. And then if you guys remember, oil actually went negative per barrel. All right, and it dropped so significantly. Oil was down like 80%. Nobody could believe it. It was down to $20 per share, and it has made a rise ever since then, going up about 250%. Now, if you guys want a summary on oil, you'll see U.S. oil and gas production is largely and primarily under a purview of its private sector. Enough said. U.S. LNG exports are increasing, and we will have the largest LNG export capacity in the world in 2022. How is energy being used? It is the use case that are important in the energy transition. In light of the developments in the Ukraine, namely Putin's miscalculated attempts and reintegration of the formerly lost ex-Soviet Union satellite countries, the importance of geopolitical influence in energy has been revealed. We all know that Russia oil and gas is under heavy influence of Putin's rule and regime. Many European countries have been diversifying their gas imports away from Russia. U.S. LNG exports are increasing, and we will have the largest LNG export capacity in the world in 2022, surpassing Australia and Qatar. Europe, however, has its own world-class shale gas resource as well, according to be a reliable source. Misinformation campaigns have been mounted by certain actors. U.S. oil and gas production is largely and primarily under purview of the private sector. This is probably the most important thing I could say. It's an inclusive and all-encompassing statement. U.S. energy security is tied to the many threads that comprise U.S. oil and gas assets, publicly traded firms with diverse ownerships, private firms and their stakeholders, and U.S. taxpayers and consumers in other ways. Diverse ownership translates into no one entity or person controlling U.S. oil and gas, which is important. Admittedly, there is tension in the push to net zero. The many shades of energy, whether green, olive, brown, pragmatically will have to coexist. So basically saying that it's not going to all just go to green energy all at once. You know, they're going to coexist together. The role of the financial markets and energy transition, and when aren't energy systems transitioning, is complicated. It's shaped by world events. All right, and here we'll see some other ones as well. So you can see, you know, crude oil in Tokyo. You can see ticker symbol ICE. Natural gas is another one that's going up. Yesterday, an investor asked, why are crude oil prices up 10%, but many oil and gas stocks only marginally increase? My answer was that last week the markets were already priced in volatility, and the expected oil price risk premium is also priced in. Humans had to likely adjust to their trading algorithms. Firms such as Pioneer, which is PXD, OXY, and ExxonMobil, XOM, are also good oil companies that you can be looking into as alternatives. ExxonMobil is one that I personally like to look into. They're one of the biggest gas stations, obviously, in America. All tell different stories because of their size and varied exposures to the direct geopolitical fallout. News and supply and demand factors. Also, firms, gas versus oil weightings come into play, and their respective Russian or European exposure, such as BP, which is another big, obviously, gas company, gasoline company, gas station company in America. BP, ticker symbol BP. All right. And if we look here, you can see something that was put out by E-Trade. They were looking at PXD. Fast forward to today, and the energy map is already shifting. Unintended consequences in energy are going to mount, but they were already in play. Investing in commodity-based stocks has been an important part of my portfolio and grounding factor in my research. Sustainable infrastructure-related stocks are holding value as well in my portfolio. Diversification with slices of concentration of sectors in which I understand has also proven out. So overall, there is some risks in oil, up 81% in the last year. A lot of investors are probably already cashing out, and there's a chance that we can see a big fall in oil like we have in the past, but there's also a chance that it can go back to the 5-year resistance, which is closer to like $80 per share, and it can definitely go above $100 per share again. Overall, I think USO or oil in general is very risky to have in your portfolio. That's why I'm personally want to buy under $50 per share or at least under $60 per share, because that makes the risk versus reward on USO worth it, in my opinion. Okay, the next commodity that we want to talk about is going to be gold. Okay, now personally, if you're going to be investing in gold in the stock market, I like to buy it just tangible, like a gold coin or a gold bar, for example. Coin is the best one to own because it is the most versatile over a bar or the stock market. But if you want to invest in the stock market, let's say you only want to buy $25 of gold or $50 of gold, that's going to be the best way, because if you buy a full coin, it's going to run you about $1,000 to $2,000 for a gold coin. So that's the good thing about the stock market. It allows you to own fractional shares, and it also lets you get in with $25, $50 if you want to start investing in gold. Okay, now with that being said, we have gold up 34% in the past 3 months. In the past year, you can see it did hit a low of under $20 per share, closer to 17. So that's where I personally want to be buying gold. I think I do have a small position like at $18 or $19 per share on gold, but I don't hold too much in the stock market for the reason that I already talked about, earlier in this segment of I rather own tangible gold or save up $1,000, $2,000 and actually buy a coin of gold. That's just me personally, but there is definitely some benefits of owning it in the stock market. So under $20 per share, I think is the best place. You could see that this was founded in 1983, so it's been around for a long time. If you go to Google and type in Barrick Gold, ticker symbol GOLD, you can actually see the movements that it's been making in the past, 20, 30 years. The market cap is 43 billion, PE ratio is 21, and you get a nice little dividend on it as well. Now here you can see that it has been positive earning company. And if we kind of read a little bit about what the bulls are saying, gold companies tend not to follow the general economic cycle. They can provide a hedge to inflation risk. Okay, so this might be a little bit safer if you want to diversify your profile in that way and put a little bit of a hedge against the stock market as a whole, or even put a hedge against inflation. Now, if we look at what the bears are saying, investors looking for gold exposure can skirt company-specific risk by investing in gold-backed exchange-traded funds. The risk of falling gold prices overshadows any operational improvements the company can't execute. Okay, so it's saying that basically it doesn't matter their earnings or their EPS or anything like that. The falling of gold in general will be dictating the price of this specific stock more than the fundamentals and things like that. Now, just a quick summary. We won't go too much in detail on this one because there's one more commodity that I do want to go over, commodity-based stock. All right, so a summary is Barrick Gold just reported a blowout quarter, beating on earnings and revenue. Barrick will spend up to $1 billion on share buybacks and increase its dividend 11%. All right, so it's interesting things going on. Barrick's excellent quarter is good news for Barrick, but also other gold miners who will likely start to get more attention from investors. So here we'll also see Barrick Gold had a little bit of a breakout at $20 per share. Now they're up to $22 per share. They were hanging out at like $18 per share for a while, which the 50-day moving average is sitting at around $18 per share, and the 200-day moving average is sitting around $20 per share. So that was the nice breakout there. Barrick Gold, ticker symbol GOLD, just crushed its earnings. All right, beating on top line, bottom line. One of its stronger quarterly earnings in recent memory, Barrick shares rose by 7% post earnings, and I believe its strong quarter will also likely have an impact, a positive impact on other gold miners as it provides further gold miners are cash cows at spot gold prices. Okay, so that transitions us to our next commodity-based stock, which is a pretty good one. It might be the best one on the list. So let's go over it a little bit. The ticker symbol on this one, by the way, is SBSW. All right, Global Precious Metals and Minerals Companies. That's what it mainly focuses on. It's another gold company, produces gold, but it also focuses on platinum, some other materials. I'm not going to pronounce all those ones because I'll probably butcher some of those names there, but you can read them for yourself. So it also has a nickel, copper, and chrome. So this one's more like an ETF for precious metals, indicating it's a great pick for investors in general, but also fits the bill of majority of value investors. According to CNN Money Poll, among 11 polled investment analysts, all held steadily that this stock is a buy. All right, so here you can see it has an A+ almost on everything. All right, with a forward P ratio of only 4 times a multiple, trading more than 71% below the sector. All right, and a current PEG trading more than 95% below the sector, it's clear that this stock is trading at a discount. Year to date, the stock is up 23%. And as we look to the future, how mining and the bullish commodities outlook, SBSW comes at significant value. SBSW growth and profitability. The financial health and growth prospect of SBSW are stellar, with an A+ growth grade and excellent underlying metrics. SBSW is seeing year-over-year revenue growth of 55%, which is absolutely ridiculous. That's even high for like a tech company like Snapchat or Google, Amazon, Apple. If they put out 55% growth year over year, that basically makes them the company they are today. And forward operating cash flow growth of 69%. As outlined in their 2021 Q2 earnings result, diversification and investment into recycling have been key drivers of SBSW's growth. One of the largest platinum group metals, PGM recyclers, 17% of their ounces of metal come from recycling, which is very, very interesting. Here you can see a little bit of a chart here with cash flow. All right, and some of the growth behind recycling. This has led to become a multi-commodity business versus a single commodity business, which has contributed to their growth. In addition, 21 Q2 saw 29% higher production in gold. Uranium is a significant element in SBSW's green metal and nuclear energy portfolio, which also experiences tremendous growth in Asia Pacific. Earning estimates have been positive, leading to the fiscal year 1. All right, up revision in the last 90 days. Not only is revenue strong, but the profitability is strong too. Here you can see A+ on almost everything. EBITDA growth, fiscal year over year. It's all A pluses. Okay, so it's really good. Really, this is one of the best commodities that you can look into. Commodity-based stocks. Profitability is also strong, as cash from operations is a whopping $1.8 billion, and current levels FCF margins stand out at an A- at 13%, with its recent purchases of 2 South African mines. Wow, 50% stake. So they just they just bought 2 South African mines as well. SBSW wants to increase its footprint in South Africa by removing mine boundaries, boosting production, and sharing in the profits of these mines. Considering the mine life is being extended by 4 years, this could potentially result in hundreds of millions of dollars in additional profit in a few years. Still, these potential profits are depending on high PGM, platinum group metals, prices over the next several years. So as a conclusion on commodities, in a recent Bloomberg article, Goldman Sachs expressed that it is extremely bullish on commodities and believes we will experience a potential decade-long super cycle. The best place to be right now, particularly given the Fed pivot, are commodities. We think you're going to see another year of outperformance of commodities and real assets move more broadly, said Curie. Commodities are in a global short supply. Investing in commodities as an inflationary hedge and a way to diversify your portfolio without overpaying is a great way to capitalize on rising costs. Fear of market volatility are creating more buying opportunities. Over the last month, as investors have been looking for safe haven instruments, many top stocks may shield from a volatile market, and many are no longer attractive valuation. Now, we didn't go over price points on SBSW. It is already up 36% in the past month, keep in mind, and 58% in the past 3 months. Goldman Sachs, we can see a super cycle over the next decade of commodities rising. But personally, I want to be buying under 15 or as close to $15 per share on SBSW. I think buying close to an all-time high, above $20 per share, is extremely risky. I want to at least buy at $18 or $15 per share, and I definitely think they can get into that $15 range or below once again. However, if commodities decide to just rise like crazy, and this might be the bottom or the lowest that we can see commodities in the next few years. With that being said, dollar cost averaging for long term might be the best play on some of these commodities. Just doing like $5 per day, for example, or $10 per day, figuring out a budget. And that's what my close friends list is for, and my one-on-one coaching. If you guys need help analyzing stocks or figuring out a plan, a budget for yourself as well, I put on that one-on-one attention, so you can message me every day with different stocks you're looking at, bounce ideas off me, and I can get back to you as well. So I hope you guys did like that video about commodities. It's a little bit of a change up of the videos that we typically do, but with everything going on right now, I think it's a good idea to talk about commodities. So smash the thumbs up button, message me on Instagram if you want more information about my close friends list. Check out the success stories that people have been having over the last year. We have over 500 testimonials now. Success number 4, success number 3, success number 2. You won't be able to see these green ones because that's for the close friends list people only. But if you join the program, they will be available for you. All right, guys, share this video with a friend. Make sure you smash the like button, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.